Hi, guys, and welcome back to Money and Politics. And hope you all are having a great day. I don't know how long I'll talk tonight because I'm going to tape in Chicago tomorrow, which means I'm trying to get my work done today that I would otherwise have done on Friday. But given what's going on with Humbl, I didn't want to not have a video because I won't be able to do a video tomorrow. I'll be either on the road or spending the night in Chicago. I still don't know which. But let's take a quick look. So what went on today with Humbl is we went down to 40 cents. How low did it go today? Do we have the day range? Well, pretty much that's close to the low. And on, again, heavy volume, I'm going to call it 17 million shares, which is a lot more. I would say a couple of things. One, off the top of my head, I'm almost like thinking, well, why now? Why is this going down now? And part of it is, well, we had this stupid allegation of a lawsuit which wasn't real, and I think that spooked people. I'm not a lawyer, so I don't know if that qualifies for stock fraud, but the people that put together that website might face some charges. There could be people who are still thinking we're going to be diluted in December. It's not on my radar. And I think there's other people who, sadly but understandably, just got tired of holding the stock going down, 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 for so long. And again, if we go back here to a 6-month chart, they just didn't have the stomach to see this going down and their money becoming worth less every day. Nobody likes to see their portfolio value going down. I get that. I've been there a number of times. I'll just leave it at that. I've gone through that a number of times and I get it. Some of the things I say, I think too, make more sense now that you're feeling the loss and the pain. So what is there to say of anything that's new? The thing I fear is not the stock price at this point. On one hand, it's obviously cheaper. And as someone once said, why is it that every other thing in life you want to buy cheaper except for stocks? Which is an interesting observation. Someone asked me on Twitter today, you may have seen my response, would you recommend I buy more? Well, I can't recommend that anyone generically buy more because I don't know what your circumstances are. If you are going to invest, you want to put in money that you can afford to have sit there and that you're not going to need to pay any bills. Now, just to put it in context, my answer was, can you afford to have a beer? I mean, most of the bars that you would go out to, you're probably going to pay $5 to $6 a beer, and typically you're going to throw in a buck tip. So there's $6. Well, if you divide the current price into $6, you could buy about 17 shares of Humbl for the price of a beer and a tip. When you put it in that context, when you buy a beer for $7, $6 for the beer and a buck for the tip, when you buy a beer, are you concerned about the rate of return on that beer? I mean, it'll quench your thirst. You might have a great conversation while you're drinking, and that's a payout. But financially, it's a guaranteed loss. So that said, if you bought some shares of Humbl, and as I said to them, tell me where is it going to be at the end a year from now? What are the revenues going to be a year from now? What will the stock price be a year from now? If the stock price is $2 a year from now, I don't know. I'm not promising you it's going to be $2. Maybe it's $5. Maybe it's $10. Maybe it's 40 cents. I don't know what it's going to be because I don't have a crystal ball, and neither do you. But if it were $2, which I think is keeping it somewhat conservative and right in the range of being realistic enough, no one would be shocked that it could be $2. Well, then the $7 that you would spend for a beer a year from now would be worth $34 if you put that into 17 shares of Humbl. So the opportunity, and what if 2 years from now, instead of it being $2 a share, what if in 2 years from now it was at $6 a share? Because they had their business lines running and they made some tweaks, improvements, and at $6 a share, those 17 shares that you bought would be 16 for over $100. So for the price of a beer in 2 years, if the share price was just $6, that would be worth over $100 to you, right? 60 and 42, $102. So the upside potential here on a risk reward, I think of it as a seesaw. Risk on one side, reward potential. Is the reward worth the risk? Can you afford to lose $100? You've already got what you got in. Can you afford at this price to lose $100 or $50 or $20? I don't know if you can. That's up for you to decide. But I am trying to put this into some context, and not in the only context of looking at a chart where it's gone down for 6 months. A lot of things have gone down for 6 months. Other things have gone up. But anyway, that's what I would say about Humbl. And I still think that fundamentally, as far as the business is going, nothing is changed. It's like the last video I made. They're going to have the ETXs. They're going to have the peer-to-peer coming. They're going to have ticket sales. And as we get rid of COVID around the world, as that tends to fade away one way or another, we're going to have more ticket sales for ballparks. My St. Louis Cardinals played to a full house this year. Last year, they didn't have anyone in the stadium. So as you buy tickets for concerts and other things, we're going to have more ticket sales. We did see in a very narrow way in the third quarter earnings that we got, what the sales were. And there were, 6.8 million in ticket sales with $490,000, as I'm going from memory here, in profit to Humbl. We had someone post here on Twitter, and I didn't copy it just because I've got so much to do tonight. But we had someone post a nice tweet about the cost savings from buying tickets, and they're comparing the price from Humbl to buy these tickets versus, I think it was either Ticketmaster or StubHub. But Humbl is underselling the competition. That's a good thing. So with the business lines that are being established or already are established, it's the same thing I've been saying for months. What's going to happen now is we're going to have to judge the company based upon their performance, their revenues, and their sales. And I think they're going to be growing their sales. I think they're going to be growing their revenues. If you want to worry about something, I wouldn't be worrying per se about the stock price. I would be worrying, and I'm not saying this is going to happen, but I would be worrying about, is there going to be other competition out there that's going to be moving faster into some of the product lines that we want to be moving into? That's always a threat in everything. And, Humbl is not the only game in this field. This is, where you got to go out, and other people are going to be trying to develop their product lines too. So as we sit here on the 18th of November, 2021 at 40 cents, and knowing what we know, what don't we know that could happen? And maybe even, in some cases, likely to happen. Well, I think we know that at some point they're going to have the price, I think they're going to have the price go higher. I think they're going to have revenues come in. Now, where is it going to go higher? I don't know. But I don't think it's going to be sitting down here in the 40-cent range. I think it'll be going back to $1 and north of $1, and who knows where in 2022. We know that at some point they're going to go for an uplisting on the NASDAQ. Okay, number one. There is certainly the possibility of other acquisitions. It does become harder to make an acquisition when your stock price is 40 cents versus something else, $1 or $1.50. But there's a chance of other acquisitions. There is also the chance of a merger when we have, I kind of touched on this the other day, just like, as I said, General Motors bought a number of different companies. It's also possible that Brian might say to another developing company, hey, let's merge and move forward together, because together we can move forward faster. Now, is that going to happen? I don't know. I'm speculating here. But if that were to happen, and it's certainly not out of the realm of potentially happening, if you want to know what should we do about the stock price, if there's some of these mergers and all of a sudden you're growing the company and boom, and COVID goes away and the economy opens up more, we could have a much larger stock price. So unless there's some reason that you need to pay the rent or pay your mortgage, or you have a burning desire to buy something and you need to sell your shares to do that, my advice is that if you sell here, and you're probably almost everyone is underwater at this point, if you sell here, you're going to be selling at a loss, and you're not going to like that. And what would be the reason to take that loss? Because it's not really a loss unless you sell your shares. So why would you want to lock in a loss? Maybe for tax purposes. That could also be a reason why some of these prices are going down. Might be that some people are deciding to take a tax loss, and then after 30 days, they're going to buy the shares back. If you sell here and then say, good riddance, I'm done with Humbl, I'm leaving, and you find out that a year from now, it's at $5, or 4 years from now, you look at it and it's $20. I mean, how are you going to feel if you had 10,000 shares that you sold to pull $4,000 out, and a few years down the road, it's $20 a share, and that the shares you sold for $4,000 would have been worth $200,000. Am I promising you that's going to happen? Of course not. I can't promise. No one has a crystal ball. One of my 10 commandments of investing. You can get the smartest guy in the room. He doesn't know the future any more than you do. He might know what some trends are. I'm just saying, folks, that you shouldn't be buying shares with rent money. You should be buying with shares you can afford to keep in there. If you don't want to buy more, that's certainly up to you. It's all up to you. It's your money. If you don't want to buy more, don't buy more. If you want to buy more and go, wow, you just told me that, hey, yeah, maybe the 17 shares I could buy of Humbl today, instead of buying one bottle of wine or one beer, maybe I'll buy 17 shares. And if it is $10, 4 years from now, the equivalent of that one beer would be $170 to me 4 years from now. If you're watching this and you're some 20-something-year-old kid and you've got years to go, who knows what this could mean for you? If you're 65 years old, hopefully you can hold on to it for another number of years. If you're a parent and you want to buy some on a custodial plan for your kids in, some online brokerage, and you can get the shares now at 40 cents, well, that's, as I say, that's something that you could consider. You could buy them a number of shares that would be meaningful without spending a bunch of money. 100 shares would be $40. I mean, that's about what you're going to spend now just to fill up the gas tank. So when you think in terms, as I close out, I often like to say, as compared to what? Should I buy this shares? Okay, how much you're going to buy? You're going to use the money. So buying the Humbl shares compared to what? Compared to buying a beer, compared to putting gas in the car, compared to buying a dress or a new tie or some toy your kid is going to get for Christmas or a pumpkin, whatever. The reason we're investing, just to go back to basics here, is because if we have, let me pick an arbitrary number, let's say 10,000. 10,000 now would cost you what, $400? $4,000. $4,000. So the point is, if 10,000 shares, if 5 years from now, and there's some merger, and maybe they're not even called Humbl anymore, maybe they're called something else after a merger. But if 5 years from now, the shares that you have today, the 10,000 shares, are worth $20 a share, and they're on the NASDAQ, how are you going to feel if those 10,000 shares would be worth $200,000, and you sold them just because back in November of 2021, you were upset because the price had gone down for 6 months. But if you're a working stiff, the reason we invest is because we can do 10,000 transactions, and every time it goes up a penny, it's $100. Every time it goes up $1, it's $10,000. So this is still a way where you can, especially at these prices, I don't want you to put too much just in Humbl. I want you to have a diversified portfolio. I've talked about that. But at these prices, you could certainly buy a number of shares, and I believe the company will grow and the stock price will follow their growth. And as it does, it'll create wealth for the shareholders. The last thing I would say, what's on my mind tonight, and I try not to be too political, but I think and I've kind of touched on this before, we've been on a long bull run for a long time, a historic bull run. But with the policies of the Biden administration that I think are totally wrong, with knowing that interest rates are going to rise, knowing that inflation is happening, we are really going into a more dangerous market conditions than what we have been in over the last 10 to 12 years. I think we're going to be okay by and large for a while, although things, I can say that and something can happen tomorrow. Crazy Chinese Communist Party attacks Taiwan. That would change things overnight. But I think we're more than likely going to be okay for a while. What could change the political lay of the land? I think a year from now, and I think most people agree, this is not just a partisan comment, most political observers think that the Republicans would take back control of the House and of Representatives. Likely the Senate, although not as likely as taking over the House. But if the Republicans take just the House, well, then you don't have the Democrats controlling the White House, the Senate, and the House of Representatives. The Republicans can block anything too crazy going through. And as we get into 2022, and as it appears, or if it does continue to appear to be that the Republicans will win the House, I think that that would bode well for the stock market. Now, any number of other things can happen, so there's no guarantees here. But that could save us. The point of this is, I think we are going, generally speaking, into a more dangerous time where the market could take a real correction than what we've had in recent years. So as you go along, I would not necessarily be putting all your savings into purchasing stocks. I would also build up your cash part of your portfolio. And to the extent that you have some good gains, I would, it's not to say you have to close a position, but I would close out some of that, take some money off the table, and, sell some of those shares. And here you have, this is a dig, and you can see where the chart on this is up significantly, even though there's some volatility. The oil and gas dig has gone up significantly over the last 1 year. So that's like an example. I mean, if you wanted to build some cash, depending upon how many shares, you could sell 50 shares and you got $400, or 5 shares is $400. 50 shares is $4,000. Depending upon how many you have, sell a few shares. And you can still ride the future, but you can do it with that cushion. Well, folks, I'm going to close out. I hope you are not overly concerned. I know no one who holds Humbl stock for this year, including Brian Foote mostly of all, is happy with the stock price right now. Not happy with all the shorts. Not happy with people making up lies about a lawsuit. What I am just trying to tell you is that what I told you. I'm going to hold on. I would think you should consider your financial condition, and are you going to be happy if you sell your shares now and they are worth significantly more a year from now, 2 years from now, 3 years from now? Because as you know, if you've listened to me at all, I've said buy this and hold it for 3 to 5 years. I'm still saying that. I'm still saying that Humbl is the baby in the crib. We've made a lot of progress this year building the infrastructure of this company, but that is still a work in progress and will continue to be going forward in 2022, which is why I'm going to be, optimistic, looking for the revenue growth, the profitability. Profitability is going to take a while, but in the startup we can look at the revenue growth, and I think we can hopefully get some exciting quarters coming up. All right, folks, I'll say good night. Thank you as always for watching. Give me your comments. Love reading them. And we will talk to you probably not until Monday, but we'll talk to you then. Take care. Have a great weekend.